Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Thursday, the 23rd of March, 2017. We're approaching 850 videos on my channel. Um, that's a lot of videos. Hopefully, you've gained something out of it. Again, this is another Trader Bite. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is mixed, sideways. Basically, we are trading about where we left off yesterday. A fair amount of selling on the close yesterday brought us back to the mid of the session, below the point of control in the S&P futures, and we've basically remained there overnight. The leader today again is gold, trading $1,252.70, up $3. And the loser today is crude, down 23 cents on the May contract, trading at 47.83, 47.84. The high is 48.48, and the low is 47.77. So it's trading near its lows for the session. Volume overnight in the minis is fairly decent, 171,000 contracts. So overall, the market's in a kind of a holding pattern this morning, is what it looks like. Europe is mixed, so is the U.S., and I'm seeing a mix of safety as well as risk assets, kind of being positive and negative on both sides. The news this morning, really the big thing is the attack in London. Still sorting that out. There have been some arrests. This morning we got initial jobless claims in the U.S. 258,000 versus 240,000 estimated, so slightly worse. Continuing claims 2 million versus 2.04 million, slightly better. And then as far as what's on the calendar, we're looking for new home sales at 10 o'clock Eastern for February, 565,000. EIA natural gas at 10:30, negative 149. And then consumer confidence at advanced for Europe for March at 11 o'clock Eastern. That's expected to come in at negative 5.9. And then other than that, on deck, as far as speakers, we have Yellen speaking now. No economic or monetary policy remarks being made. But at 10:45, we get ECB Speaker Lautenschlager. And then at 12:30, we get Fed Speaker Kashkari. And then this evening at 7 o'clock Eastern, we get Fed Speaker Kaplan. Let's take a look at, I'd like to get you guys out of here as quickly as possible. Yesterday, the market was opening on the edge of the sell-off day. Again, the prior day was a big sell-off day. We had not seen a day this big on the sell side since September 9th. I believe that was the date. And the expectation is that the market's likely to open sideways, attempt higher, fall out, and then continue lower, but expected to consolidate around 2332 as the key part of the objective for the day. That did not quite happen. What did happen is what we see here. Market goes off and sells off, finds a base, starts to rotate back up, and comes back into range. 2351 expected to be the area where the market stalls on the upside. Here's what actually happened. So there it is. We open, we fall out of range. Okay, we find our base. We couldn't quite get to 2332. We missed it by 3 ticks right here. And then we push back into the range all the way back to 48, and then go sideways. Basically, the green line here is the prior day's low, and we essentially traversed it pretty much the whole session. We kept crisscrossing in and out of the prior day's range. However, it was clear early on that we're likely to push into the prior day's range. In my opinion, Great scalping opportunities, short-term opportunities yesterday. Some good rotations in there, pretty good volatility as you can see here in the two-tick Renko. It looks noisy, um, and we don't see that. We haven't seen that very often. It seems noisy at a two-tick Renko level, which means there have been many rotations, and that's I welcome that. But overall, when you look at how the market has rotated, you see some pretty good rotations here. 9.25 down 4, up 3, and then consolidates down 5.75, and so on, down 5. So wider than what we would consider to be normal or usual for this product, which is somewhere around 2.25 to 2.75 points on most rotations. The profile looks like a double distribution, almost a triple, with the point of control at 23.45, and the market's holding at 23.42. Yesterday's close is around, let's see, the closing print. The closing print was 23.42.75, and the overnight tested the high, and has fallen off since. So overall, I'm expecting a fairly quiet open this morning. Not much doing. So you can see here in the overnight session, we open, we get strong, and then we fall back through the mid. We retest up. So now we can see that this is imbalance. It's just disrespecting or not paying attention to the intraday intersession levels there, and it's just swinging back and forth on the entire range. And so what we have here is a market that's pretty much in balance with a downward skew. Sellers are dominating here recently, but if you look at the delta down here, let's expand this out. Look at the delta down here, and it's fairly flat. It's starting to sell off here on the open as we approach the open, but overall, it's a fairly flat overnight session. Volume is really good though, 183,000 in the overnight session. So we'll probably have something on the open as the market continues its auction here, but overall, not expecting a tremendous amount of, not expecting too much this morning. Let me get rid of these lines here. This morning, I'm looking for, let's look at the flex levels real quick. That this gap zone here is about to be taken off. It's been tested from both sides basically, and then we have our weekly low. Remember, we broke the weekly low, so we are one-time framing. We're potentially one-time framing down now on the weekly, so sellers are likely to be in control. This morning, I'm looking for an open auction. A test lower, but I'm looking for this to try to recover some of this selling. I'm looking for 2360 as the key target here on the primary hypothesis, but I'm looking for this to be fairly slow on the open. That will be your hypo 1 for this morning. Come on, circle. Okay, square. So 2360 is the target upwards if we get up there. This has wound up pretty good. We did extend the prior day's low. So I'm looking for a corrective move, which what it looked like yesterday it was doing was a corrective move up. So I'm looking for a continuation of that move on the first hypothesis. The secondary hypothesis is for the market to balance the selling that it's doing right now, attempt higher, and then start to fail lower, and then push towards 2335, bounce, attempt lower, and then hold for another day as it accumulates energy to decide on the next move. Will sellers step in and take us down, or is it done to the downside and buyers can now step in and take it back up? Okay, that's a nice little circle. So those are the two main ideas for today. Again, it's the goal here is not to predict what the market will do. The goal is to have a plan and targets. That's where I'm showing these turns. There's a purpose to where I'm showing these turns. and those become my targets or areas that I'm going to monitor to see how the market's responding in at those levels or in those zones. I don't really believe in lines on a chart. I consider those lines to be zones the market can push through by 2, 3 ticks, and it's still a valid area. Don't try to be too stringent with the way you look at the market. It is, uh, you know, the market represents human behavior, and human behavior is not neatly organized and packed into neat little lines. Just I think that's misleading. A lot of people sell stuff to people to traders to make them believe that it's all nicely, neatly packaged. It's not. It's messy, just like humans are messy. Anyway, just remember, don't stick your neck out unless you see an edge. If you're sticking your neck out without an edge, you're basically just gambling, and there's no longevity in that. Anyway, that's all I had for you. Good luck today. Take care.